When Netflix dropped 50% the first time from about $700 all the way down to $350, losing 50% a few months ago, I was interested. Now Netflix has since that point dropped another 50%. Now they have my attention. Netflix is trading at $220, down 36% just today. I think that this is way overblown, and I had to do some research here. Here's what I found, and I think some of these statistics are alarming, and it just shows that this Netflix scenario is way, way overblown, way oversold. So let's start here with some statistics, and then we're going to look directly at what Netflix, the company itself, just said in their press release from their Q1 earnings. If you enjoy this video, don't forget to like and subscribe. So if we look here, as you can see, Netflix is top dog in the video streaming world. Netflix has 62% of households are using Netflix. Their closest competitor is Amazon Prime Video at 54%, and then it's a sharp drop off from there. Disney Plus 33%, and a lot of these other names are non-contenders. Let's be honest, they're dogs. I mean, Peacock 11%. CNN Plus just came out. They can't even get 10,000 daily active users. They might have to scrap the whole thing. Well, you know what it must be? It must be all their competition. All the other streaming services must be adding millions and millions of subs and stealing them from Netflix. Oh, you know where I found that stat out? It was actually on CNN Plus. I'm just kidding. I wasn't on that. Nobody's using that stuff. As subscription fatigue sets in, some new entrants are learning that you can't just slap a plus on your name and cash your chips in. Boom, roasted. CNN Plus, CNN's new streaming service, is reportedly getting below 10,000 viewers a day, despite its launch budget of $250 million. Got this from the Morning Brew today. So I can't wait to see what all the other companies report when they have their earnings. I guarantee you they're losing a lot more subs than Netflix is. Showing us why you can't just slap a plus on something and make it a streaming network. Maybe Netflix needs to rebrand to Netflix Plus, and then shareholders would like the stock more. But this is great because I'm seeing a huge buying opportunity develop here. Now, obviously, these statistics are from 2021. We'll have to wait. Maybe in May we'll get another update of this chart, but I imagine Netflix is still at the top. But anyway, we're going to look at some of the recent numbers they do talk about in their report now. So this is hot off the press here from Netflix. Netflix titles are very popularly globally. We know this. One of the problems they've been having is that a large number of households are sharing accounts. When you combine that with the competition, which we're going to address in a second here, it's creating some revenue growth headwinds, but I think that the fears here are far overblown, and when we look at the numbers, you'll see if you agree. Key to our success has been our ability to create amazing entertainment from all around the world, present it in a highly personalized way, and win more viewing than our competitors. These are Netflix core strengths and competitive advantages. They have a lot more competitive advantages that I'm going to talk about in a minute. Together with our strong profitability, we believe we have the foundation from which we can both significantly improve and better monetize our service longer term. So the quarterly results came in. They lost 200,000 subscribers, as you can see, and we're going to address why this is literally a non-factor. This is so irrelevant. It blows my mind that the stock has gone down this much. And also, people didn't like, obviously for Q2, they're forecasting that they're actually going to lose 2 million subscribers, to which I ask, if people are cutting Netflix, what are they doing with all their other streaming services? Because if I'm correct, I think that those will be going first before Netflix, as Netflix seems to have the most content. You know, anytime anybody is talking about a show, there's a big new cultural phenomena. What platform did they watch it on? Netflix, and we're going to see some of the titles in a second here. So they outline 4 major paths for growth here. While they've got hundreds of millions of homes that pay for Netflix, well over half the world's broadband homes don't even yet have the ability to watch Netflix. Netflix has not penetrated these markets because smart TVs and broadband have not penetrated these markets. So that's a huge avenue for growth. Obviously, we can't put a timeline on that one. They have some other paths here that are much more, measurable, that we can see really start to take shape in the next few years. So that was the first factor that they can, grow with that increasing broadband and smart TV market. Second, in addition to our 222 million paying households, we estimate that Netflix is being shared with over 100 million additional households. So people are stealing Netflix. We know about this, but they're starting to take steps to crack down on this. And this is something that, again, it just shows you over the next few years, as they do crack down on it and solve this problem, they're going to have 100 million additional households right there. Now, granted, they won't all pay for Netflix because they're too busy freeloading, but they will capture a significant chunk of that. These people have come to not be able to live without Netflix. There's a great runway for growth. Next up, third, competition for viewing with linear TV. Wait till we get to this chart, guys. Oh my God. Third, competition for viewing with linear TV as well as YouTube, Amazon, Hulu has been robust for the last 15 years. However, over the last 3 years, as traditional entertainment companies realize streaming is the future, many new streaming services have also launched. So that last chart, the last statistics I showed you guys, obviously is a little dated from May 2021. I can't imagine things have changed that much though. But here's a different way of looking at it. If we look at the share of the total US TV time, Netflix still weighs supreme and by a pretty big margin. So as of February 2022, Netflix had 6.4% share of the total US TV watch time. So streaming makes up about 29% of the total US TV watching time, which I think obviously we know the trend is only going to continue to increase. Of that 30%, Netflix captured 6.4%. And when we compare that to the competitors here, YouTube, actually the closest competitor, and I don't even know that they're really a direct competitor. I think YouTube's a lot different. But anyway, 6.4% for Netflix, 5.7% goes to YouTube. You know, YouTube is a big platform, I think, with the growing creator economy. It's another interesting investment opportunity. That's why I own shares of Google. Obviously, Google owns YouTube. So I think there is a lot of potential for that as well. But when we look at, you know, what I would call the more direct competition, you go to the next biggest contender. Hulu has 3%, not even half of what Netflix does. Prime Video, 2.3%, Disney, 1.7%, and then all of the other subscription video on demand platforms have 9.5%, and there's got to be at least 20 other platforms, so they're not even relevant. They are non-competitors. They are dogs. Most of these platforms are not going to work out, I'm convinced. And even if they do, it's going to be a very small niche part of the market. Netflix is going to be the biggest player. I just can't see any way that doesn't take effect. And again, we're going to get to more reasons why I think that Netflix is the most strongly positioned. And of course, fourth, macro factors including sluggish economic growth, increasing inflation, geopolitical events such as Russia's invasion of Ukraine. When we're on the brink of World War III, people are probably watching a little bit less TV. Well, they're probably watching more of the news, just not Netflix. And some continued disruption from COVID are likely having an impact as well. Okay, fine. Just wait till we see some statistics on where they lost these subscribers in a minute here. You're not going to believe this. It's honestly comical to me. So this is another thing I think is very interesting. On the content side, we're doubling down on our story development and creative excellence. They're smashing record after record. They just released their biggest documentary film ever, The Tinder Swindler, which had 166 million hours viewed. These are trends I can only see continue because Netflix has many benefits that are not so concrete and measurable. Number one, I would say, is the first mover advantage. Being the first one into the streaming service, you know, it's really funny. I'm starting to see a lot of parallels between Netflix and Tesla. Is Netflix the Tesla of the streaming industry? Perhaps. But here's why. With the first mover advantage, they've had the longest time and they've been solely focused on this. Whereas a lot of their competition, you know, let's say Amazon with Prime Video, Apple TV Plus, even Disney, these businesses are not solely streaming businesses. They're focusing on many other, projects and business avenues. Netflix is solely focused on streaming, and this leads me to my next point, the innovation stack theory. If we look at this is what the Square co-founder had said. It was a reason he gave for when Amazon tried to copy Square's business and beat them. Square was actually able to beat out Amazon because of this, what he coined the innovation stack theory. Essentially, when a company is solely focused on doing one thing, they're going to be better at it than anyone who tries to copy them but is focused on all these other different business avenues. So essentially, because they're solely focused on, streaming here, their platform, they're going to continuously make these incremental improvements and, make it at worst just slightly better than the competitors. But these slightly better characteristics will translate to people realizing, they like this platform better. This is something I see a lot with Spotify. I'm an avid user of Spotify for music streaming. They are solely focused on streaming. Again, kind of similar to Netflix. I've gotten Apple Music trials. I'll do them for a month or whatever, but I always end up going back to Spotify because I do feel it's incrementally better and it is continuously improving. And you can definitely see that. I think you apply the same innovation stack theory to Netflix here. Another interesting point too is I think a lot of these other networks, they think they can just move to streaming. But a lot of what's even desirable on those networks is the old shows, right? The new shows, anything new that's popular and relevant is coming from out of Netflix, a little bit from Disney Plus and the other, but the majority is definitely Netflix. You look at the legacy networks, I'm going to call them, really, this is like Tesla of streaming here. They're reliant on these old shows that appeal to a niche audience that is older and shrinking, let's say. So moving forward, if Netflix has the most content, they're going to have the most relevant content. They're going to be pumping the most money into producing new movies, shows, documentaries. I mean, how do they not win? It's pretty simple. I mean, it's going to come down to who has the best budget, and Netflix being solely focused on this one industry, whereas many of their competitors are focused on multiple industries. They've got a lot of advantages baked into the cake here. Netflix also has a focus on continuous improvement, which has served them well over the past 25 years. I love that. Continuous improvement is something that's big with Tesla as well. This is how you stay ahead, because you're not standing still. Even though there's competition, you're continuously improving. So they may be able to catch up to where you are today in 5 years, but 5 years from now, you're going to be better because you are focused on continuous improvement. Another focus is how best to monetize those sharing households. We kind of touched on already. Obviously, there's a lot of room for growth there. Now, here's another great example of a company who's, kind of taking a revolutionary path here. Over the long term, I think this is a huge strength. Much of our growth will come from outside the US. Traditionally, US entertainment companies have viewed international as an export market for US content. Typical Americans, I'm one of them. But we saw long ago that great stories can be made anywhere and loved everywhere, dramatically broadening the pool of creators with whom we can work, increasing the variety of our programming and better serving local tastes. To support this, we've been building out capabilities like creative development, personalization, and language presentation localization. Netflix is now producing films and TV in more than 50 countries with a high degree of integration in the local entertainment ecosystem, resulting in the creation of blockbusters from every region. Who else is doing this? And let's just look at a few of examples here. 3 out of our 6 most popular TV seasons of all time are non-English titles. Squid Game is the only one of these that I've watched, but it's just a perfect example. They're taking a different approach than everyone else, and it's clearly yielding much better results, because Squid Game, obviously this was very appealing to the Korean and Asian audiences, but it also became very appealing to the American audiences. See, this is Netflix giving the people what they want that they didn't even know that they wanted, us in America here at least. And this is something they can just continue to do, while again, these legacy platforms are just going with the usual playbook, making the same shows and thinking that internationally they're going to be adopted and, revered. But, that is not the case, I don't think. I think the world is changing. American hegemony is kind of ending here, and there is going to be a bigger focus internationally. So again, Netflix is already capitalizing on that. What are the competitors doing to work with that? I'm looking at you, Peacock. All right, got to some revenue here, and this is where it really just hurt my soul. This stuff is mind-blowing. Our goal is to sustain double-digit revenue growth. Operating margin, they're expecting around 20%. Their Q1 results. Their revenue grew 10% in Q1 2022. They didn't even lose revenue. They barely lost subs. 200,000 is nothing in the grand scheme of things, but their revenue still grew. They were able to, obviously it was because they increased prices about 8% year over year on the streaming memberships. But when you think about it, that's good. I mean, it goes to show that they have that pricing power, that they're not going to lose too many people. And let's get to why they really lost people. So they lost 200,000 people here. The suspension of our service in Russia and winding down of all Russian paid memberships resulted in a negative 700,000 impact on paid subscribers. So if you took out this Russia-Ukraine war, if that didn't happen this year and they didn't lose these 700,000 Russian memberships that they were forced to terminate, they actually would have gained 500,000 subscribers. Why is this stock down 50%? Or 65% since November? You please try and explain to me. Now, even beyond this, they're investing in the future. They made 2 acquisitions, leading visual effects company Scanline and a gaming studio called Boss Fight Entertainment, as well as they purchased the Helsinki-based gaming company Next Games. So guys, please let me know your thoughts in the comments below, and what am I missing here? Maybe I am missing something, because to me, it is utterly ludicrous that this stock is down as much as it is, and I'm ready to start a position. So just to recap, and one other thing I did want to mention, I forgot. When you're choosing a streaming service, how much does sports factor into your choice in purchases? Because I was having a conversation with some friends. To me, I think sports is really a non-factor. It barely moves the needle here, maybe with the exception of football, because that's another argument people are making. Apple, Amazon are signing these deals to, have certain baseball games and other sports. But I just think as a whole, I don't think it's really enough to move the needle. Maybe I'm wrong on that. Let me know what you think of sports. Does that impact your streaming subscription service decisions? Let me know in the comments below. But, Netflix has several advantages that I think are not as concrete and measurable, these intangibles, so to speak. They're the first mover advantage. You look at things like the innovation stack theory, their continuous improvement will keep them ahead of the competition. They're solely focused on this. So they're going to do a better job than someone like Apple, who, yeah, they might have a ton of money that they can throw at this, but this is a small segment of their overall business. They're not giving it their overall focus. So we've seen they can hike prices. They have the pricing power. They've got this huge untapped international market, and they're going to start cutting down on the household stealing membership subscription. So I can see a lot of avenues for growth baked into the company. I think this sell-off is way overblown. I mean, I'm looking at the stock here. It's down to $223, utterly insane. I might have to start the position. Let me know your thoughts in the comments below. If you enjoyed the video, please don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.